What's up everyone, Eric here again. This is the second trade alert for today. I opened up a trade earlier in Chewy and now this is SPY or SPY, which is an ETF that reflects the S&P 500. I'm mixing things up here a little bit for some different content, and this is the first iron condor that I'm doing for the channel. Strangles and iron condors are the same concept where you have a high and a low range, but a strangle is an undefined risk trade where an iron condor is a defined risk trade, which means you have a max loss and a max profit, where strangles just have a max profit and an unknown max loss. So how that works here is I sold the 400 and the 345 strikes, and I want the price to stay in between these strikes. Then I purchased wings of 340 and 405. So if the price goes below 340 or above 405, that will result in a max loss for the trade, which since I sold this at 90-cent credit, these are 5-point wide spreads, my max loss would be $410. Let's check out the trade tab to see the details. Per usual, I'm in the 30 to 60 day window, and right now we are at the 44 day. To get an iron condor started, you can either individually select the wings you want, or you can come up here in Tastyworks, and you want to have a short iron condor. It means you're selling to open the trade an iron condor. So you do that, and it drops in 4 legs of the trade for you. And then I almost exclusively trade 5-point wide iron condors, so that means I need to go out here and need to push it out here. However, the default positions are way too aggressive, so come down here to the width and spread things out quite a bit. So I went out to 90 cents. All right, so eventually that puts you close, but then usually you got to tweak things, and that's what I did here. So I'm at the 405 and the 400, and then I come up here and I need to tweak this to the 340 and the 340 strike. So if I did this trade right now, I would get 95 cents, and that puts me at a 61% pop and a 90% P50. My max profit is $95, and my max loss is $405 because you have a 5-point wide spread here, and 500 minus 95 is 405. Then 405 is also your buying power effect, and that is locked in. So the advantages of the iron condor over a strangle: the iron condor has the buying power effect locked in, your max loss is locked in, and your max profit is all locked in. None of this changes. Doesn't matter what the prices do, you have a max loss and you have a max profit, and buying power will not fluctuate. Where if you have a strangle, you have a max profit locked in, but you do not have a max loss that is unknown, technically infinite or undefined, and then your buying power effect will fluctuate, and on a ticker like this, and on most tickers, requires much more than $405. If I did a strangle in this same position, I think it takes like $3,000 of buying power versus just $405 here. So if I didn't have these protective wings, this one here on the put side, and then if I took away this protective wing on the call side, my buying power would skyrocket to like $3,000. However, with the strangle, you could push this out even wider. You know, instead of selling the 400 strike here at the 11 delta, you could probably push it way out here to like 407 or something and still be collecting more money actually. And then your pop would also go up with the strangle. So there's pros and cons to each one. I'm throwing this in here just to kind of get some new content and show you how they work. You know, when I do iron condors like this at 5 points wide, I try to collect around $1 here, give or take. And iron condors and defined risk spreads are a great way to trade higher dollar tickers, right? Even if you have a smaller account. So in this trade, 95 cents, that's close enough to $1 for me. My position is actually at 90 cents, so I'm technically down 5 cents right now, or $5. But that's no big deal. That's how these trades always start out. You never start at the very bottom, right? It's like buying a stock. You never enter a stock purchase at the very bottom, at least very rarely. Guess we can take a look at the curve of this trade real quick. This is showing you what the trade will look like at expiration. I need this trade to stay in between 345 and 400. If it gets much farther higher than that or lower than that, I can start to lose money. And at expiration, I'm not sure, this is not calculating properly. At expiration, if I held this all the way through, I would get 95 cents because that's the credit I received for selling this. And right now, this is pretty much right in the middle, and that's great. Ideally, this would just sit right here in the middle, like 370, 375, and not go anywhere. And then it's literally a matter of time, and time decay sucks value out of the iron condor, and then I can cash out at around 50% of my max profit, which would be like $45 to $50 here. So that's playing with the iron condor or a strangle. Same deal, you have a lower and an upper limit. It's just that the iron condor is defined with these protective call and the protective put, where the strangle doesn't have those. You just have the short put and the short call, and then these taper off even farther to bigger losses on the low and the high. I guess we can take a look at the chart real quick to see what's going on with SPY. Alright, so this will give you another way to visualize how an iron condor works. Again, it's very similar to the strangle, as you have a high range and a low range. However, with the iron condor, you have a protective wing on each side. So if it breaches that wing, high or low, eventually the trade will get maxed out at a max loss, where a strangle does not have that. If you go lower or higher on a strangle, in theory your losses just keep adding up to bigger and bigger losses, where that won't happen with an iron condor. So just like a strangle, I want the price action to stay in between my low strike and my high strike here for the next several weeks, and then it's literally only a matter of time before time decay sucks the value out of the iron condor, and then I will cash out around 50% of my max profit. All right, I think that covers everything. Let me know if you have any questions. Trade small, trade often, and I'll see you in the next video.